about. Now, I have to tell you about the JOLTS report. You need to know this. The JOLTS report is monthly data about job openings, hiring, layoffs, quitting, etc. This report is provided by the Bureau of Labor Statistics. JOLTS stands for Job Openings and Labor Turnover Summary. So the unemployment rate, that shows the supply of labor. The JOLTS data shows the demand for labor. So it's important to look at both. So take a look at this JOLTS number. So this is provided by Y-Chart. The JOLTS report on May 2nd shows that job openings are declining. It's fallen to 9.59 million in March. That is down from 9.9 million in February. That's down from 10.8 million in January, 11.2 million in December. So it keeps falling. And you have to remember that this is demand for labor. So take a look for yourself. This is the lowest amount in nearly 2 years. So this means that demand for labor is cooling off. And this will consequently slow down wage growth. Therefore, wage inflation is expected to decrease. So that's good news for the Federal Reserve, but that's bad news for everyday Americans because that means that everyday Americans will see lower wage growth. Now, the quit rate. The quit rate fell to 2.5%. That is the lowest percentage in 2 years, so less Americans are quitting. We're going to be paying attention to the JOLTS data because companies tend to freeze hiring first before they start the mass layoffs. But you have to remember that certain industries, they're farther along in this process than others. Now, let's take a look at the details of the April jobs report. Well, bottom line is that the numbers that were reported smashed expectations. The forecast was that the economy would add 180,000 jobs. It came out to be 253,000. That is 41% above expectations. The forecast was that the rate of unemployment would increase from 3.5% to 3.6%. Instead, it fell from 3.5% to 3.4%. Now, I want you to understand how incredible that is because even at 3.5%, it is at historic lows. So take a look at this. So this is the unemployment rate. This is a U.S. unemployment rate for the past 60 years. 3.5% is all the way down there. And in April, it fell even lower to 3.4%, which is tied for the lowest amount since 1969. So that's why I'm saying that this is wild. Now, let me give you some of the details in this report. Professional business services had the most job gains at 43,000 jobs added. In second place came healthcare, 40,000 jobs added. Then leisure and hospitality, 31,000 jobs added. Social assistance, 25,000 added. Government hiring rose by 23,000. Economists are saying that this was an impressive report given the fact that the labor market remains robust in the face of falling GDP. So basically a weakening economy. Q1 GDP, it took a nosedive. It fell to 1.1%. So the Federal Reserve said on Wednesday that the labor market remains strong despite the tightening of credit conditions. So that's another thing. Credit conditions are tightening as well. Ultimately, you can interpret this as there's resilience in the labor market and take a look at the stock market. The stock market was very happy about this report. It blew past expectations. Now, I'm going to chime in with my opinion. If you want to leave your opinion, please do so in the comments down below. I'll be taking a look. So first of all, you have to remember that it's the reliability question, the reliability of the data that is being reported in this report. I don't know how reliable these are because this is just my opinion, because they release these numbers and then they revise them. And it's not like they're tiny revisions. They're pretty dramatic. They revised the March data. They slashed it down by 71,000 jobs, which is 30%. They also revised February's data downward. So not only was it March, but they revised February as well. They revised that downward by 78,000 jobs. So I don't know what to tell you. And the unemployment rate is at 3.4%. That is the lowest since 1969. But these numbers, they're open to interpretation because what do you mean by unemployed? So says the government. They changed the definition. What does unemployed really mean? If you stop looking for a job because you can't find one, then you're not considered unemployed. You're out of the labor force and you don't count as unemployed. So I believe that this jobs report, it doesn't paint the most accurate picture of the labor market. So listen, I'm not predicting, and I've been clear about this, I'm not predicting that we're going to have the next Great Depression. I made that very clear, but some of this data from the jobs report, it's hard to believe. Again, that's why I said that if you're skeptical, I don't blame you. The JOLTS data is showing cooling demand. GDP shows an economy that is slowing down very quickly. But this report, it shows a lot of resiliency. However, I would not be surprised to see some pretty big downward revisions in the months ahead, or in a month ahead. And another thing is that I'm not talking crazy, or I'm not going conspiracy theory on you. That's because the Federal Reserve, they even gave their prediction in their economic summary report that the rate of unemployment will hit 4.5% by the end of the year. That's what they said. The Fed projected a mild recession in the back half of 2023. So that's why a lot of people are shocked to see the labor market as resilient and as robust as it is being reported right now. However, as I told you, that in the labor market, when things go bad, they can go bad very quickly. So many economists are predicting that the labor market will deteriorate very quickly in the second half of the year. And I believe that that is how this story will play out. However, a lot of economists and investors are thinking, so they're thinking that this is going to happen. A lot of people are under the assumption that the Federal Reserve will pivot their monetary policy in Q3 of this year. A pivot, that means when the Federal Reserve starts cutting interest rates. The expectation is the Fed pivots in Q3, it boosts the economy, and then we will not see the deterioration in the labor market, and we will get a soft landing. So I discussed the Fed pivot in my previous video. I don't think it's going to happen, but that's how the labor market ties into this. So that's my opinion. And again, I'd like to hear yours.